Hey, good morning, good evening, good afternoon. Thank you for joining us on the Future of Fortunes podcast. This is Jake Claver again with my partner in crime, Byron Rolfe. How are you, Byron?
Great, man. Living the dream over here. Living the dream.
In between Christmas and New Year's,
Yeah.
it's going to be good. Today, we're going to go kind of recap the interview with Ray at Link 2 and go over some of the cool things that you can do with a self-directed IRA and the ability to purchase some private equity on their platform. So before we hopped on here, Byron was explaining how you could really build an appreciable amount of wealth and mitigate taxes using this strategy. So if you want to hop right into that.
Yeah. So, obviously people weren't listening to us while we chatted about
Yeah.
it. So, I'll recap a little. So, if people aren't familiar with a self-directed IRA, it's very similar to exactly what it sounds like, right? So it's self-directed, meaning that you get to direct the investments of that IRA. IRA, if you're not aware, is one of the vehicles for essentially retirement. So there's IRAs, 401ks. The self-directed IRA functions as a Roth IRA. Roth IRA essentially you pay the taxes on your money, and then you're allowed to take that money after you've paid the taxes on it. You invest it in the IRA, the Roth IRA, self-directed IRA, a few others. And then that money gets to grow tax-free. And then when you retire, you get to pull that money tax-free, right? So definitely my choice for investment vehicle. The advantages to the Roth IRA, self-directed IRA, is the tax advantages. So the other side to it is if you choose to take it before tax, you're not going to pay tax on that money, but as it grows, that total amount that it is, when you start pulling that money in retirement, now it is taxed. And so the argument is like, well, when I retire, my tax rate's going to be lower. But that's a big gamble to me, right? Like I know what
Mm-hmm.
my tax rate is now. I know that it's going to grow, and I would much rather pay it on the money now than pay who knows what the rate's going to be when I retire, right?
Well, and
And
it's on
so it's
significantly more money if you've done well investing, right?
yeah. So, to me, it's almost, and I'm not picking on people to choose this, but it's almost like saying, hey, I'm not going to be very good at this and the money's going to be the same, so I'll just pay the taxes later. Like that's definitely not me. Some people call it conceited, some people call it, confident, whatever you want to say. I know that I will make good money on the money that I invest. So
Right.
I would much rather pay it on a smaller amount now than pay it on a much larger amount later on, right? And so with the self-directed IRA, you pay that money. So one of the limitations is the investment limits, right? So $6,000 a year. If you do not have one and you're looking to set one up, you can fund it from the prior year, right? So when you first start out, yes, it's six, but you can bring in the prior year and then you can increase that after the age of I think 56 or something.
Yeah.
So
Yeah. 55,
um,
I think it bumps to
yeah,
like, is it 7,000 or
Yeah,
7,500?
yeah, 7,500, I think. And so you can invest more in it. So if you're in a higher age, just Google it. I mean, I'm sure I can Google it for people, but it goes up. But 6 grand now, you can take the prior year. So realistically, when you set it up, you can throw 12 grand into it pretty quickly.
Yep.
And so yes, that's a limit. For sure. It's not a ton of money, right? But it is after tax. And so let's be real, like it's, if you have an extra 12 grand just to play with, at the end of the year, like you probably are in the higher percentage of earners. Because a lot of people don't have, 12 grand or more just laying around waiting to do something with, right? And so it is a limit. I get that. But it's probably fairly realistic for a lot of people. So take that 12 grand, you invest it again after you pay the taxes on it. So if you ever heard the phrase, I know Jake and I use it a lot, you pay it on the seed or you pay it on the crop. What that means is like, all right, I'm gonna pay the tax on the seeds that I put in the ground, but I'm not gonna pay it on the crop when I grow all my crops. To me, that's the way to go. Again, you're assuming you're gonna have a great crop yield, right? Or you can say, hey, I don't want to pay on the seed, I want to pay on the crop. To me, that's kind of a negative outlook because I'm saying, hey, I don't want to pay it on the seed. I want to see what happens. Then I'll pay it if my crops do good. Well, I'm not that way. I'm
Right.
conceited in the sense of, yeah, I know my crops are going to be fantastic. So I'll pay it on the seed. But yeah, so you can invest in it. So and again, we had this conversation because we want to talk about Link 2
Right.
and what they have as options. And so we didn't get a chance to ask Ryan, but on the website, they have a piece in here where they talk about using your LLC, your equity. I'm sorry,
Your
your
trust or
trust.
your company to have the
Exactly.
ability to invest on their platform.
Yes, yeah. So, man, I love this. Right, this is fantastic. So there are some limitations on what you can do. You know, there definitely are some rules and regulations around that directing of those funds. And so I will say this, and Jake, you know this as well. The self-directed is a tiny bit of a misnomer, right? Because it makes it sound like you have all this control and you can do it and you can benefit. That's not true, right? So you cannot directly benefit from those investments. You can't, make a bunch of money, take it out, and go buy a Lambo, right? I mean, probably, like,
There's an
yeah,
roundabout way to do that. And we'll get into that.
yeah. There's ways to get around it, but you can't go directly. Like, there's processes. Same thing with the investment, right? And so the reason that this is so exciting to me is they are saying, hey, we will be the vehicle upon which we're going to keep you legal for those investments, which is fantastic. So you can't go in and like do the things that you want to do in the self-directed, right? You have to have somebody that's going to do those for you. So there's that degree of separation.
Right.
And so they're going to be that. And it's fantastic, right? And Jake, I know you're already on the platform. I just recently signed up for the platform. Amazing opportunities on this platform to invest in some of these plays. You've got some investments in there currently, right? Yeah, and so I'm in the process of getting my self-directed IRA, my trust set up within this so that I can start to do some trades on here. Super stoked about some of the offerings. And so what Jake and I were talking about is not every investment you make is going to be perfect.
Right.
That's just a reality. But you can make a lot of these. Some of these plays are, I want to say long odds because it makes it sound like we're gambling. We're not gambling. We're
Well,
investing.
they're asymmetric bets, right? And so I talked about Coinbase with Ray.
Yeah.
So we'll just use that as an example, right? So say you took your $12,000 that you funded a self-directed Roth IRA with, and you had bought Coinbase through their platform at $32 a share.
Yeah.
Okay. And then when it IPO'd, it was a direct listing, and you sold your shares onto the market for $350. So you just 10x'd your $12,000 in 1 year. So that's $120,000 that you have now that you could then redeploy on their platform into other asymmetric bets that also may have those similar type of gains. And that's where you're going to get crazy compounds on your money in short periods of time, that it's like it makes sense, and all that's tax free at that point, right? Like that's the whole point of the self-directed IRA. If you have that with a traditional broker, so like Fidelity or E-Trade or one of these other ones, you're going to be
Yeah.
playing in the stock market with public markets don't tend to have those type of returns. And so there have been things that do, right, but they're few and far between. Like if you got in Tesla at the right time, or Apple, or some of these other big ones.
Yeah.
But for the majority, you're going to have a lot better odds at getting those crazy types of returns through private equity investments like they have on Link2's platform. And I'll go ahead and throw the disclaimer in here right now. Anything said here is not financial advice. This is for entertainment and educational purposes only. Always consult with your financial advisor before making any financial decisions. So there it is.
Yes, 100%. And we were talking a little bit about the guy that he's got, like, I think the last count it was 3 billion, 5 billion something, and it's self-directed
Mm-hmm.
IRA, Peter Thiel, and so that didn't happen because he somehow skirted the limits of the contributions. In fact, I had to pull it up. I couldn't remember the guy's name, so I had to Google it. Just pulled it up. He stopped funding his self-directed IRA in 1999.
Yeah.
So like he stopped putting that $6,000 in, right? And this thing grew, says at the end of 2019, $5 billion.
Unreal. See,
Insane.
I couldn't remember his name either, but I knew that it makes sense that it would be Peter Thiel.
Yeah. Oh yeah. Yeah.
But
Probably should have called though.
that's the type of, well, not everybody, he's hit every time, right? But
Yes.
again, that's that same concept of you put it into something that's going to have exponential growth and then redeploy the gains there into other things they're going to have exponential growth. And those are the type of investments you can do inside of a self-directed IRA on a platform like Link2. I don't know what platform Thiel was on, but
Yeah. Yeah.
again, you have to go through some type of broker. You can't just, go in your buddy's business in a
Yeah.
self-directed IRA.
Yeah.
That has to be an actual securities offering that's registered, and somebody has to, buy it through their brokerage.
Yeah. Yeah.
But
Exactly. I think it's interesting. So I had to look it up, but the current stock price of Coinbase, even after its massive drop, is still at $35.
yeah, so you didn't lose
So
any money. You're still up $3 if you got in on Link2.
yeah, so yeah, exactly. Even if you did that, $342, like you said, IPO, right? $342 cost you $32, and then it did peak again in November. Had a little bit of a jump there, but yeah, $35. Like you're still up, like even after the massive like just drop.
Yeah, 90% drop from the IPO.
Yeah, yeah,
You're still
still,
even.
yeah, still sitting pretty good. And we just went through crypto winter, guys. Like, I mean, it's and this is cyclical. Like, and this probably is a whole nother podcast, but you can look at these things like it's up and down, up and down. Markets do the same thing. So, if you are one of those people that invested in and you got in at 32 and you're looking at 35 and you're thinking, well, should I take my $3? Again, not investment advice, but you literally are at the bottom, in my opinion, probably, unless they just drop completely out. But
You could even
Coinbase is
add
one.
here,
Yeah. Oh, yeah. Yeah. I think great spot too. In fact, I personally just added to my Coinbase holding probably, I don't know, maybe a month ago. I think it was 40 something at the time, but I thought the price was great. Honestly, I thought the price was pretty decent at IPO. Like I was one of the morons that bought shortly after the IPO. So, I thought the price was good, and they were first to market.
Mm-hmm.
So unless
Right.
something really crazy happens, I feel like they still have some,
Yeah, they have staying power. I think they'll be around long term. But to that point, Link2 has Uphold on their platform, which I think is a
Yes.
sleeper.
Yeah,
Um,
I agree.
they've got their own
Ripple,
private equity. Yeah, Ripple.
Polyside. Yeah, you
Both
can
of
invest
those.
in them. Yeah, like you said, you can invest in them. That's like, man, that's solid right there. Like, yeah, they got some good ones. I was just looking at it. If you're a gamer, they got Epic Games, and they've got some other fintech investments. They got Acorns, which a lot of people use Acorns. Like it's a good little platform, and they've got logistic tech, and like if you know anything at all about like supply lines right now, they're horrible. And logistics is the answer to that. So like I definitely see a need for that. 3D printing, which I mean, shoot, that could be a whole, like, it's crazy the things they're doing there. But I mean, they have some really cool ones on here that, I feel like are going to be solid. And what was the thing? And he talked a little bit about they have like a weekend drop on the investment piece.
Yeah. So if you want it, so you only got your 12K in there, right? And you don't want to have to dump it all in one, because normally their minimum threshold is the 10,000, but on the weekends they drop it to 5, right? So you could sprinkle that in two different ones if you felt like, Ripple and Polysign, you wanted to get both. You could do $6,000 in one and $6,000 in the other inside of a self-directed IRA. And again, whenever those things IPO, those are the ones I hold, just full disclosure, and I think that they're going to do very well in the short and long term. You redistribute those profits, right?
Rule of 10.
Yeah.
Invest in in 10 if you're looking at riskier plays. Try to invest in 10. If two or three of them kind of hold their own, right? So let's say 3 hold their own. Maybe 6 crash and burn, but one's your rock star. It's your rocket to the moon. You come out
like a rose.
Pretty good.
Well, and Link2 mitigates a lot of that risk because they don't even bring anything onto their platform that's not going. Well, so PolySign is $500 million is its current valuation, but almost anything else they list on their platform is already at $1 billion valuation. It's a unicorn private company. So there's already massive capital put behind these companies before it even gets on the platform. And this, whatever seed round they're funding for them is often B, C, D, E, F, late stage. It's not like it's an angel investment or even early seed round. Like these companies are pretty well established and already have pretty significant profits before they're even listed on their platform. So that's the other piece I like about them. They've chosen a model that lends itself to significant gains and mitigated a lot of the risk in doing so.
Yeah, and clearly, I mean, these aren't investments that are risk free. Like that's not what Jake's saying. So
Well,
like
so
again, do your research.
I'll give you an example on that. So BlockFi was offered on their platform. BlockFi just went bankrupt, right? So no investment is without risk, and they have had, just to be transparent, companies on there like BlockFi that have gone bankrupt. They didn't offer FTX, but people would have thought FTX was a sure bet. It's a $32 billion private company, and now it's zero. So while crypto and these technologies are young before full adoption, to your point, there's going to be some that look like definite winners that fizzle out. And that's why if you are going to play in this type of market, unless you have some insider information other people don't have, then you probably want to mitigate some risk by diversifying in there. And that's what hedge funds do. Hedge funds or venture capital firms, if they've got 10 million to play with, they'll go into a sector. They think, okay, like you said, 3D printing, for example. There may be 10 companies that are on the leading edge of 3D printing, and they don't know which one's going to win, so they just throw $1 million in each one. 8 of them go out of business, one stays in business and does okay, and one of them's 100x. Okay, so they lost that 8 million on those other ones. The other one maybe 2 or 3 times your money, and then you got one that's 100 times your money. Like,
there you go,
you're good. And that's the benefit of being diversified in an emerging class. And that's why they do it that way. It's hard to pick winners before everything kind of shakes out. So
100%. And that's exactly what you need to look at. You gotta, even if you 100% believe in something, because you said FTX, and I feel very strongly there was tons of people that thought FTX, there's no way that this thing's gonna crash and burn, and but they did things that made them look healthier than they actually were. And so I would take that information in when you're looking at any investment. Like, yes, they've done the research, they've looked at these things, they feel confident, right? Or they wouldn't put them on there. But again, just being on the platform doesn't guarantee any kind of return. So, if you're looking at investing, this is not a guarantee. You're not buying. I mean, I was going to say government bonds, but even those have risk. But
we can talk about. So to get those types of returns, right? If you're looking at a 10x return, often you're going to have a decent amount of risk associated with that investment. People invest in indexes and blue chip stocks that have been around for a decade or more because of their stability, and they might get a dividend, and they know that it's going to be a slow, steady growth. And people are attracted to that because it's low risk, but it's also very low return, right? If you want higher returns, then you're probably going to have to take substantially more risk when you're investing. And that's just part of the deal. And that's why you want to look at asymmetric bets where the downside risk, you put your, and again, not financial advice, I'm just going to give some numbers here. So you're in your self-directed IRA, you got your 12,000, and you put it across 2 companies. If you lose, it's $12,000. Okay. And that might be pretty significant to some people. But if you win and they both 10x, let's say one of them 10x and the other one's, 5, or you get your money back on it. You're looking at 5 or 10 times your money, or you lost 12,000. Like, if you go to the casino and you throw that down on the roulette table, you might double. And that's super risky, right?
Yeah.
To get that much higher return, that's an asymmetric bet, in my opinion. Like the loss is small, whereas the return is significantly outsized in comparison to that. So,
Yeah. Yeah. And it may not have the same thrill as putting all that money on black or on red or double
yeah, the
zero if you're
adrenaline.
really crazy. But it's still like there it is still like, to me, it's fulfilling. I enjoy it. Some people don't. I enjoy it. I know Jake does as well. But like, when you're researching things and you're looking into these and you find common interest, and I'm not saying like go invest in only the things that look like they're gonna do well financially or whatever, right? Like if you're in a decent spot financially, you can invest in things that you believe in to see kind of where they're gonna go. But then you also get that added benefit of like making some money off of that, right?
Mm-hmm.
And so the beauty of that self-directed IRA, investing in your trust, is these things are going to grow like over time. It's not something you need right now, but you're setting your future self up for that, financial stability, or like true wealth, right? Like Peter Thiel, I mean, he doesn't need that money now. Obviously, he does extremely well, but like he literally will have, 5 billion, whatever it's currently valued at, was 5 billion, whatever. He's going to have that when he retires. Like even if he does absolutely nothing, between now and then he'll have that money at retirement, and that's amazing, right? But you still get to kind of play in that pool. It's not something you just put this money away, you forget about it when you retire. Okay, cool, I got some dollars. Like you're still able to play within the self-directed way
Well, and talk
according
about
to the
that.
rules. So
So you can swap and trade inside of a self-directed IRA tax free, right? So
yeah,
there's no tax implication. So this is the same thing with crypto. If you have crypto in a self-directed IRA, you can trade without any tax implication. Whereas if you're doing that as an individual, each one of those trades is taxed.
yeah,
Same thing if you're trading stocks. If you're a
yep,
day trader and you're doing that as a person, each one of those trades is taxed. Whereas if you're doing it in a self-directed IRA, it's just compounding, right? You're not
yeah.
losing any small pieces in between those trades. Obviously, whatever the broker's fee is to do the swap,
Oh
you
yeah,
still have to pay. But
yeah,
tax implications wise, and then we've talked about before taking collateralized loans against those funds, right?
yeah,
So that was the way I was talking about earlier. You could get around, potentially having a tax liability. That self-directed IRA is tax free, and now you can take loans against it at a low interest rate also, and then use
yeah.
that money however you wanted in your own life.
Yeah, and the IRS, the government does allow, and there's no timetable on this. They did do it during the pandemic. They'll allow you to pull a certain amount of money out of your IRA that you can use for whatever you need it for, right? And it's technically a loan. You're supposed to pay it back, but it's your money. But they allow you to pull these things out penalty free. And again, there's no timetable on this, but historically, I think it's like I think I've heard 10 years, I've heard 15 years, that they allow you to pull funds out for conditions. In fact, I know that they just passed something, their new law that either is going to be passed or just recently got passed for January 1. They've increased some things for retirement. They've increased some of the restrictions, but they're allowing you to pull some money out of those for like basically emergency expenses or
Mm-hmm.
emergency things that occur. And it's not a ton of money, but it does allow you to pull some things out. So, and your CPA, your accountant, I hate to say it, but Google, like, it's probably going to give you some good answers. So you can find out a lot of these little things that do happen over time that allow you to use those funds. But yeah, Jake, I love that, like what you just said about taking those loans against it, because that's really the answer, right? Like I don't want to say it's a workaround, but that's kind of that's the workaround, right? Like you take loans against that. You can use those for what you need to do. Jake and I, obviously we're biased. We're big fans of that, like, building up your holding, so to speak, and then doing the loans against it, right? They're your personal loans, your money. And this isn't the whole like individual banking concept, but the physicals, the financials behind that are sound, right?
Mm-hmm.
So basically you're the bank, and you're gonna
Loan
take those
yourself some
loans
money.
against it. Yeah, loan yourself some money, right? Who better to pay interest to than yourself? I'm, I like that. I don't want to pay anybody else. I want to pay myself. Like, if
Right.
I'm going to pay it, let me pay it to myself. So yeah, great way to do that. Take advantage of it. And there's other platforms that are out there. There's tons of platforms that you can invest your self-directed money in, get into the crypto, things of that nature. Again, self-directed, a little bit of a misnomer. You're not doing it, but the directing part is good because you're directing them to do what you want them to do. The self part is really in line with a self-directed. So it's not self-invested, it's self-directed, right? You're going to tell them what to do. And so this platform Link 2 will do those things for you as you direct them to do them.
Yeah. And again, if you have a trust or an LLC, you can set that up on their platform, and they'll allow you to fund investments from that vehicle, and it stays with that vehicle. So
yeah. If you have just a company, you just have a general company, it's under an LLC. Let's say that company needs to hold a certain level of cash. Maybe you're a little cash heavy. Instead of distributing it, you say, hey, I want to invest that within the LLC for whatever reason. You don't want to take that money out, invest it personally. You want to keep it in there. Set it up under your LLC, trade within the LLC. Obviously, those funds aren't as liquid as like straight cash, but they're pretty good. Like, I mean, it's
well,
an investment. They're cash
on their
derivatives.
platform, it's about as liquid as you could get. You can buy and sell and trade any of those pieces of private equity at any time, as far as I'm understanding it, because they'll buy it back from you.
Oh, yeah. So I mean, an extra step, but still pretty liquid, and like, if you need money that fast that you can't liquidate your position, then you may need to, call the FBI because you're probably paying ransom money or something,
Yeah. And in the future, Ray had talked about that you'd be able to swap between regular equities and other things. They want to be connected with your ability to trade for real estate and, swap between private equity and almost anything else. So it'd be very liquid in the future once the XRP ledger's, fully live and integrated with the financial system and everything there. That's where they're building it. And I look for them to be a leader in that area. There's not anybody else that I'm aware of that's accepting crypto for purchasing private equity in any capacity, or has the vision that they do that allows such a liquid marketplace for private equity. So should be pretty cool.
Yeah, no, I agree. And the fact they're going to be in real estate, like, I truly believe like the path towards true generational wealth almost always has some real estate in it, and so the ability to get into real estate and this and kind of move those things over, make a good little chunk of money, move into real estate. Although real estate isn't completely safe, I'm not saying that, but I mean, it is based
It's
off
cyclical.
of yeah, it's cyclical. But if you've got the time, pretty solid. So
Oh, there we go.
okay.
Weird. It zoomed in on me.
Yeah.
Let me see if I can fix that. Anyway, well, we're about at the end of it here anyway. Go ahead and wrap this one up. I appreciate you guys for joining us. I hope this was insightful for y'all. We really enjoyed the interview with Ray, and hopefully I know we'll have some other really good guests here soon. So with that, we'll see y'all on the next one.